So picture this. It's Friday, May 30th, 2025. Donald Trump at a U.S. steel plant in Pennsylvania. He announces steel and aluminum import tariffs are going up from 25% to 50%, effective June 4th. Why the sudden urge to double down on tariffs, protecting the American steel industry? It's all part of revitalizing American steel. Sounds grand, doesn't it? Except it's about import taxes, and possibly making everything made of steel more expensive. For everyone. And how can he just do this? Section 232 of the Trade Expansion Act. It gives the president power to raise tariffs if imports threaten national security. Just recently, a federal appeals court said his previous tariffs could stay. So, he's feeling empowered. The whole event was a double feature. Not just about tariffs, it was also themed supporting the Nippon-U.S. steel deal. We'll get to that deal in a moment, but note the timing. New, massive tariffs. And a big thumbs up for a specific international steel deal. Coincidence? In politics? You tell me. It's almost like one hand is building a wall, while the other is, well, we'll see what the other hand is doing. Alright, let's talk about this milestone agreement. Japan's Nippon Steel buying U.S. steel for $149 billion. Yes, billion. This deal has been brewing since early 2024, but Trump's sudden, enthusiastic endorsement, that was the surprise, especially since he'd previously grumbled about it. Why the change of heart from Trump? Politics, probably. Maybe he thinks it'll win votes in Pennsylvania. Or maybe it's to smooth things over for the deal's approval, because it's not a done deal yet. But there he was, praising it, calling it a milestone. It's quite the turnaround. From foreign takeover bad to this is fantastic, overnight. So what's in it for these steel giants? For Nippon Steel, it's about getting bigger. A massive foothold in the North American market, boosting their global game. For U.S. Steel, it's about survival and modernization. They've got aging factories, they need cash to upgrade and compete. Nippon comes in with a very large check, and U.S. Steel hopes for a new lease on life. This isn't just a business page story, folks, it's front-page news. A Japanese company buying a symbol of American industry, U.S. Steel. It's like if Toyota bought Ford, and Trump tying his tariff announcement to this specific deal? That just adds another layer of intrigue. Or, if you're cynical, another layer of what is actually going on here. Nippon Steel isn't just buying U.S. steel and calling it a day. They're promising to spend a lot. We're talking $140 billion over just 14 months. For factory upgrades, for furnace maintenance, for research and development. And a big chunk of that cash, it's headed for Pittsburgh, the Steel City. They're saying all the right things, investing in America. And what about the workers? Always a key question. Nippon says no layoffs. Plus, a $5,000 bonus for U.S. steel workers. That's a nice little sweetener, isn't it? A cash bonus and job security. Or at least the promise of job security. These commitments are crucial, especially with unions watching very, very closely. They're trying to win hearts and minds. Then there's the tech talk. Nippon plans to share its advanced technology, specifically low-carbon steelmaking tech. They're even talking about a joint R&D center, focused on green steel, with over $100 million in annual funding. The goal? Transform U.S. Steel's Pittsburgh plant into a North American green steel hub. They're aiming for a 30% cut in carbon emissions by 2027. Ambitious. Is it genuine green progress or just good PR? Time will tell. Section 4, Wall Street goes wild, steel stocks pop, others plop. So how did the money people react to all this? Trump made his big tariff and deal announcement, via Truth Social naturally. The market listened, and U.S. Steel's stock, that's ticker symbol USS, went bananas. It surged 21.3% on that single day, May 30th, from $44.10 to $53.50. That's very close to the $55 deal price Nippon offered. Investors were clearly excited, or relieved, or both. Nippon Steel's stock also got a nice bump. Over in Tokyo, it rose 7.2%. So, smiles in Japan too, it seems. But not everyone was joining the party. What about U.S. Steel's American competitors? Steel Dynamics? Their stock fell 3.5%, Nucor, down 2%. So the market seems to think this deal, plus the tariffs, is great for U.S. Steel and Nippon, but maybe not so great for other American steel companies. The plot, as they say, thickens, and people were trading U.S. Steel like crazy. The average daily trading volume for USS jumped by 40% compared to the week before. A lot of speculation. Despite the stock market fireworks, the deal still needs approval from CFIUS, the Committee on Foreign Investment in the United States. Section 5, American Steel, Happy Workers, Unpacking the Payday Promises. Let's look at the bright side. They say this whole thing could protect 100,000 jobs. That's a big number. And remember that $5,000 bonus for U.S. steel workers? That's definitely a plus. For those workers anyway. It's the kind of news that makes for good headlines. Jobs saved, workers get cash. Who doesn't like that story? Especially in an election year. This deal, combined with the new tariffs, could give U.S. Steel a short-term boost. And its supply chain too. More investment in U.S. steel plants, more orders for parts, more business for local companies that support the steel mills. It could be a real shot in the arm for communities that depend on the steel industry. A little economic sunshine. After years of, well, not much sunshine. Now, Trump had an interesting take on the ownership part. He emphasized that U.S. Steel would remain American-owned, even though it's being bought by Nippon Steel, which is, Japanese. How does that work? Your guess is as good as mine. Maybe it's a new kind of American-owned where the owners are Japanese, but the steel feels American. It's confusing, but it sounds good. Section 6, Union roars and CFIUS snores. Not really. The deal's downers. Not everyone is popping champagne corks over this deal. Far from it. The U.S. Steel Union? They are strongly opposed. And they're not being quiet about it. They're worried. Worried that a Japanese takeover could harm workers' rights. They fear potential cuts to benefits, or that hard-won labor protections might be ignored. These are serious concerns, from the people who actually make the steel. They've seen promises come and go before. So, skepticism is high. Then there's that CFIUS review we mentioned, the national security one. It's still ongoing. They haven't approved the deal, and they might not. Concerns about foreign ownership of critical infrastructure are very real. Steel is used in everything, from buildings to battleships. So letting a foreign company control a major U.S. steel producer, that raises red flags. For people whose job it is to worry about national security. This is a big hurdle, a very big one. Section 7, Steel Wars Episode The Sex, The Empire China Strikes Back, Quietly. So, who are these tariffs really aimed at? All signs point to China. In 2024, the U.S. market accounted for 8% to 10% of China's total steel exports. That's a decent slice, and guess what? There was a spike in steel exports from China in March 2025, right before these new tariffs. Almost like they knew something was coming, or they were just trying to get ahead. Either way, a 50% tariff, that's gonna hurt, big time. Experts predict it could cut China's steel exports to the U.S. by 20% to 30% in the second half of 2025 alone. Ouch! What will China do? They won't just sit there. Chinese steel firms will likely try to shift their exports to Europe or Southeast Asia, or they might just slash prices to stay competitive. This will put even more pressure on their profits, which are already pretty weak. China's overall industrial profits grew only 1.4% from January to April 2025. And steel firms are feeling the pinch from slowing exports. Some smaller companies might see their profit margins dip below 2%. That's barely surviving. And here's where the Nippon-U.S. steel deal adds another punch to China's gut. Remember that $140 billion investment? It's expected to add 2 million tons of high-value steel capacity. By 2026, this new, modernized U.S. production will directly compete with China, especially squeezing their market share in mid to low-end steel products.